understand the concept better. So ledger setup in D365 defines the core financial configuration, including ledger, fiscal calendar, and accounting periods, reporting setup. So it's all in one. So it's where we integrate chart of accounts, we integrate fiscal calendars, and we integrate reporting requirements, and of course exchange rates. But that's not important. So now what we have done before now, just to explain, so it also makes sense, is we have created structures, but we have not mapped them together. So we have created, so for this house, for this entity, we have created chart of accounts, we have created fiscal period, we have created currencies, but they are standing on their own. The system has not, we have not brought them together so that they can work together, so that they can form part of the structure in this building or in this entity. So what brings these three together is what we call the accounting structures. Or in other words, your ledger. So if you check here, if you go here, you see, no, let me just use ledger setup so it's clear. So your ledger setup is what brings all of them together to form one structure. If you don't do this, then you can't use them because they have still not been brought together so that the system it has not been plugged into the entity. Let me use that. So remember, just imagine you bought a laptop and it's dead. The only way that laptop can come to life is when you plug it into a power source. So for now, these entities are dead, or they are just standing on their own. Nothing is communicating with them. The only thing that will make this entity fit into this the only thing that will make these structures, these items we have created fit into this structure is when we bring them together through the ledger setup. So that's just to give you clarity on the integration between chart of accounts, fiscal year, and currencies. There are three core things that must be defined and linked together for you to be able to use the system. It took me a lot of time to understand this because, unfortunately, when you go for certain trainings, they just train you, and we're just doing stuff. I didn't understand how these things were connected. So again, remember the building and the fact that it's like if you want to do a bridge, now you understand that in doing a bridge, sometimes there are joints and connections that needs to happen. So and then when you have done those joints, you can now mount it to the structure so that it stands as a bridge. Again, we have created all those joints, and we have the most important thing now is to bring them together so that they can be part of, so that you can now say you have a bridge. If you don't bring them together, you don't have a bridge, right? So again, this is very, very important. Understanding this is very important because without chart of accounts, you cannot do any transaction. You can't do supply chain. You can't do anything without chart of accounts. You can't do anything without fiscal year. And of course, if you have multiple entities, you can't do anything if you have not set up your currency structure. But if you have created them individually and you have not mapped them together through accounting ledger structure, then you cannot use them. The system will throw up errors. So let's do the mapping. Okay, sorry on the yes. Again, let me see. So I've defined that, and let me see if we have. So if you see here the ledger setup, which we are going to be going into soon, we have, almost 11 things you can talk about. So one, if you look at the ledger setup, cost setup for legal entity, define accounting, currency, fiscal year, posting layers, surrounding rules, and all that. So it's very important. So ledger is very important. Another core functionality in the ledger setup is the general ledger parameters that controls the behavior of ledgers. We'll look at that very soon. And then we have ledger calendars, which we have talked about. We have fiscal calendars, which we have talked about. and then we'll look at other things as we move on. But this basically gives you an idea of the cost structure. We have the period allocation categories, voucher checks, process automations, cash position parameters. We'll see all that as we move. Again, these are all listed here. So in your sandbox or in your system, you're going to see all these parameters. But the most important for now is ledgers. So to do our ledger setup, you go to ledger setup and you go to ledger. Then you see that these things have not been set up yet. So under GUK, you see there's no chart of accounts, there's no fiscal calendar, there's no accounting structure. So, and you see currency valuation is also here. Reporting currency, nothing has been defined. Then let me also open, let me duplicate this. Open a new one. Let me change this to USMF, then show you what that looks like. Then we'll tackle it gradually. So you can see in this entity, everything has been defined. And we'll talk about the structures later as we move on. So here, if we go to chart of accounts, you click on the drop down and then select our chart of account. GMUK is our chart of account. Remember, we are mapping. We have created them individually. We're not mapping them. You go your fiscal year, we created fiscal year, then you select. Now, our accounting currency, as we have defined, is GBP because this country was created. This entity is head office, or the transactions are in GBP. If we have if the head office is in USD, for example, if the head office is in the US, then we can say that reporting currency is in USD. Accounting currency for exchange rate is in GBP. Sorry. We're going to use default. Let's check what is here. So you see here it's also default. Again, you see that both are the same because the reporting currency is same as the accounting currency. But the accounting currency is different. The reporting currency is in USD. What will happen is I think it's fine. In terms of reporting, it means that if I'm running my financial statements, then this will show in USD, but let me change it to GBP anyways. I think it makes sense. And then budget for exchange rate type, we're using, I like using average, or let's just say budgeted rates if we will use that, but that's not very important to us right now. Then if you're done, click on save. To tell you the fiscal calendar has been audited, we recommend you recalculate your ledger periods. Just click on recalculate ledger periods here. Like to update, it will recalculate. So it's like it wants to assign your fiscal year to your entity. Come here, click on OK at the bottom. Allow it to recalculate ledger periods. So it will just make sure that all your ledgers are now active. So this operation is complete. Then you can click go back. But we have not put structures yet, if you observe. So yes, that's we have linked those three. Again, another very important thing we need to talk about is your ledger structure. Also very important. Let's look at what it is. Let me use this. Now, basically, your ledger structure is what defines your reporting structure. So if you're going to have, for example, if we look at, just to give you some insight, if you look here, you're going to see we have profit and loss, balance sheet, and statistical. What does this mean? So by financial reporting standards, there are core reporting requirements that you should set up in your accounting structures. The most important of them too is your profit and loss, your balance sheet and your statement of cash flow. But again, that's what we call statistical here. So for those that are non-accountants, let me explain. Now, all these accounts we are creating, all these account codes, they finally end up somewhere. They finally end up in our financial statements. What is a financial statement? It's a report that companies prepare at the end of the financial year to show the result of activity in three main accounts or three main records. One is your statement of profit and loss. Two is your statement of financial position. So just call it financial position. And three is your statement of cash flow. Now, this is according to International Financial Reporting Standard. I think Baba is here. Baba Tunde is, I believe, chartered, so he probably will tell us more, and educate us more. But the idea is that according to, that should be IAS 1 or some IFRS, let me not go so deep. These three records or these three reports are by law what companies are supposed to present as a record, as a how do I put it now, a stewardship to stakeholders. So it's like the business has been running for 12 months. So at the end of the 12 months, you want to take stock. You want to check how the business has performed. That happened at the end of every fiscal year. Some people do theirs quarterly, depends, but generally what you have is at the end of the fiscal year, which is December/January. People present their financial statements to show one is profit and loss, meaning the sales we have made for the year and the expense we have incurred. What is the profit or loss from that operational activity? Two is our assets, our liabilities, and our equity, which shows how strong or solid our company is, because it looks at your assets and your liabilities and tell whether you can survive the next fiscal year. Three, cash flow just shows the flow of cash between, around the entity for that particular fiscal year. So these are three core reports that are required. Others can follow as per management record, or we use electronic reporter to be able to design some localized reports that the business would need. But this is just the foundation. So that's why that's what forms our accounting structure. And this has already been defined in the system. We can create ours, we can add structures that create our own accounting structure, and I'll show you that. But we'll be using one that has been defined by the system. So if we go back and come to general ledger, I think this will be end before we go for break. If you go to, let me see if I have my structures here. Okay. If you go to ledger, for example, see if I have, okay. So go back to ledger. Oh, this is the old one. So go to ledger. No. Sorry. General ledger, ledger setup, ledgers. Then you see here, you can add in your structure. So you click on add, it will show you the list that's already been done. So make sure you select manufacturing, just the standard one. Some have been created by others. So just select, not China, please. Select manufacturing P&L. Where's that now? There's my M. Yes. So this is manufacturing balance sheet. Select. Say, okay, yeah. So assign it to our structure. Add again. Select manufacturing P&L with nothing attached, just P&L. Select. Say yes. Then we can select statistical, which, it's not so necessary, but you can just select that. So we have selected these three as part of our structure. Then if you check here, you can configure structure, which again, I will teach you that that's where we talk about financial dimensions, how to map this structure and what dimensions will be part of this structure. But that again, we will look at when next we meet. So I'll go back to structures. Here you can see the list of all the structures and you can create your own. Just add new, then you can create your own structure. Like I said, we're already using the standard structure that's been defined by Dynamics. You go back. So when we come, well, we'll look at dimensions soon, but when we come, the problem is the next step will be to look at the structure and then tell the system, you see the range we talked about from 100 to this, from this to this. We can now tell the system that for this main account range, what financial dimensions are going to be accepted, and then we will test some of these transactions. But I want to see how we can again focus on what is most important. So we'll go back. Then the next thing we're going to do before we do these structures, we're just going to see how these transactions work. Okay, so we're done with this. We'll go for a 5 minutes, a 10 minutes break. And when we're done, we will continue. So if you're just done and added the structure, you see there's no save here. You can just, again, just click on recalculate. Let the system just, you have done it before, but let the system just note that you have. Um, yeah, it's done. Then you go back. So we have mapped, which is very, very important. We have mapped these structures together. And then when we come back, we'll look at parameters and some other things we need to look at. And then we'll start having our first task for the week. I'm going to share that when we come back. It's an exercise that we'll all do. And then we'll take it up from there. I want to see if we're in the same database. Anybody, Remy, what's your company code? Or anybody who has created?
Search for RECA, RECCA.
RE. No, it's not. We're not on the same server.
You check on the.
No, we're not. I think mine is a little bit different. I know when your interface, there is some design in your interface. Mine doesn't have.
So yeah, I see some figures that are different from yours too. Yeah, I think we're different.
Yeah, different server. All right. Okay, guys. When we come back, we will look at parameters gradually and then explain some of them, and then we take it up from there. Guys, let's have a good day then. Let's go for a 10 minutes break. At exactly 2:17, we should be back. Thank you.